How to invest in the stock market. With this comprehensive guide to multiply your money, we will not only introduce you to this world, but also guide you step by step on how you can start investing smartly and effectively. Here you'll find everything you need to know to take your first steps with confidence in the stock market. Investing in the stock market may seem complex at first, but once you understand the basic principles, it becomes an exciting route to financial growth. Stock market investing involves buying shares, which are small parts of a company. By buying a share, you become part owner of that company. If the company thrives and its value increases, your shares appreciate, and vice versa. The first step in your investment journey is to define your financial goals. This is fundamental because your goals will influence every decision you make going forward. Ask yourself, are you investing for retirement? For your children's college education? Or maybe to buy your first home? Each of these goals has different time horizons and associated risk levels. Defining your goals will help you determine the best investment strategy for you. Understanding and managing your risk profile is a crucial aspect of investing. Risk is a very personal and subjective thing. If you have a more risky investment profile, you should be prepared to face large fluctuations in your investments, including significant downturns. Conversely, if you prefer a more conservative approach, you will look for options that offer less volatility. It's essential that the risk you take with your investments doesn't keep you up at night. Find that balance where the level of risk you're taking aligns with your emotional comfort and your long-term financial goals. When it comes time to select which companies to invest in, start with those you already know and trust. However, it's important to go beyond and look for companies that have future growth potential. Research companies that may be undervalued but possess a sustainable competitive advantage and a robust business model. These are companies that are not just strong today, but also have the potential to grow and thrive in the future. Additionally, when evaluating these companies, consider their financial health, future plans, their position in the industry, and their competitive advantages. Ask yourself, is the company innovating? Does it have a product or service that could change the game in its sector? Is it well positioned to adapt to future market trends? Also consider investing in companies that may be undervalued, which means looking for companies whose market value is lower than their actual intrinsic value. Lastly, it's essential to stay on top of market trends and global economic conditions. These factors can significantly influence the performance of your investments. Stay informed about economic developments, changes in government policies, and world events. All of this can affect the stock market and, therefore, your investments. Before diving into the detailed analysis of investments, it's crucial to understand another fundamental aspect of the stock market: market indices. Indices, like the S&P 500, the Dow Jones Industrial Average, or NASDAQ, are key indicators that many investors use to measure the overall performance of the market. These indices represent the aggregated performance of a selected group of stocks, giving you an overview of the health of the stock market. The S&P 500, for example, includes 500 of the largest companies in the U.S., covering various industries, and its performance is often considered a good indicator of how the overall U.S. economy is performing. By following these indices, you can get a clear idea of the general market trends, which helps you make more informed decisions about your investments. Now, let's delve into investment analysis, starting with technical and fundamental analysis. Fundamental analysis focuses on the financial health and growth potential of a company. It's about studying a company from the inside. This involves reviewing financial reports, balance sheets, revenues, debts, and future projections. It's the company's numbers. How much it bills, how much it spends, how much it reinvests in itself, and so on. On the other hand, technical analysis focuses on the price patterns and trading volumes of stocks, using charts to predict future trends. While fundamental analysis tells you what to buy and why to buy it, technical analysis suggests when to buy it. News can influence market volatility. Events such as economic announcements, political changes, or even natural disasters can temporarily affect the price of stocks. However, for a long-term investor, these fluctuations are often less relevant, unless they directly affect the fundamentals of the company. Exploring investment strategies, we find that there is no single way to invest. Long-term investing involves buying stocks with the intention of holding them for years. This strategy relies on steady growth and compound interest. On the other hand, short-term trading seeks to take advantage of market fluctuations to make quick profits. But as we have seen, with higher potential gain, also comes higher risk. Dividend investing is another strategy, where you focus on companies that regularly distribute a portion of their profits to shareholders. Risk management is a crucial aspect of investing. This includes knowing when to sell a stock, not just when to buy it. Often, limiting your losses is more important than maximizing your gains. Additionally, it's essential to avoid common mistakes like investing based on emotions, blindly following advice without researching, or putting all your capital in a single investment. Now that we have covered the fundamentals and strategies of stock market investing, it's time to focus on planning and building a solid investment portfolio. Building a diversified portfolio is more than just selecting a variety of stocks, it's about balancing different types of assets to align them with your goals and risk tolerance. A well-planned portfolio could include a mix of stocks, bonds, ETFs, and depending on your goals, even alternative investments. The key is in asset allocation, distributing your investments in a way that reflects your time horizon and risk appetite. Another fundamental aspect in the world of investments is psychology. Successful investing requires more than knowledge and technical skills, it also requires, and this is extremely important, great mental discipline. A lot of character to stay calm in the face of market volatility and resist the temptation to make impulsive decisions based on emotions like fear or euphoria. This point is crucial. Remember, investment decisions should be based on analysis and strategy, not short-term reactions to market movements. Looking to the future, emerging trends in investing are continually redefining the financial landscape. From the growing popularity of sustainable and socially responsible investing to developments in blockchain technology and cryptocurrencies, the world of investing is evolving. Staying abreast of these trends and understanding how they could impact your investment strategy is crucial to staying relevant in an ever-changing market. To continue growing as an investor, it's important that you continue educating yourself and staying informed. Subscribe to financial newsletters, participate in webinars, and follow market experts and analysts on social media and financial platforms. The world of investments never stops, and neither should your education. With this, we conclude our exploration of the world of stock market investments. We hope this journey has enlightened your path to more informed and strategic investing. If you liked this video, please give it a like and share it with friends and family who might also benefit from this information. Subscribe to our channel for more finance and investment tips. Remember, investing in the stock market is a journey, not a destination. Each step you take brings you closer to your financial goals. Until next time, and remember, knowledge is power, especially in the world of investments. See you next time, and happy investing!